Good morning. Though I work for a financial institution, I am not a banker. If you do ask me very difficult and complex financial questions, I'll have to revert to my colleagues here on the panel. Just as a bit of an introduction, I mean, we've heard over the last couple of days that valuable ecosystems are today undergoing rapid degradation in many parts of the world, including Europe. And natural capital and the services that ecosystems provide are still poorly understood and rarely monitored within the financial sector. Unlike in the case of traditional commodities, the value of natural resources is not recognized today in today's markets. It is, however, crucial that we as financial institutions understand the relationship between environmental quality and economic profitability. This information needs to be integrated into the macro analysis and included in decision-making processes in the areas of financing and investments. And we've heard a couple of examples coming from Frank and Anders. First, a bit of background for those who don't know the European Investment Bank. Actually, we are a long-term lending institution set up in 1958 under the Treaty of Rome. We're headquartered in Luxembourg, and our shareholders are the 28 EU member states. We are, amongst our peer institutions, which include the World Bank Group and the regional development banks, the largest multilateral lender and borrower in the world. We do not finance only in the EU, we finance pretty much everywhere. So we have about 400 projects annually in about 160 countries, and out of that financing of a volume of 70 to 80 billion euros a year, 10% of that financing are for projects outside of the European Union. And 25%, I think I just want to make a point of that, is 25% of the total volume of lending goes towards climate-related projects. And at the last meetings in Lima, World Bank annual meetings, that commitment was increased to 35% for outside of the European Union. Somehow. All right. I'm going to skip to this one. Where are we today and where do we want to go? So the EIB has been committed to environment and social sustainability, and it's part of our mandate. And protecting biodiversity and sustaining healthy ecosystems are part of our core values. And this, as Frank has given the example of PS6 and the IFC, this is manifested through our standards. And you see that most of our work is done at the bottom of the, or at the left of the arrow, bottom arrow, is really in applying our standards and risk mitigation. And this is how we engage with the private sector and our public clients. However, we would like to increase the flow of financing to biodiversity by moving beyond kind of a donor-funded approach and becoming more of and taking more of an investor approach. But our portfolio currently is in biodiversity is quite small, and the application, however, of our biodiversity standards, which are very similar to those of PS6, represent actually an important extension of our biodiversity work. But in order to get to the large-scale biodiversity and ecosystem investments and be a lot more proactive, there's a long way to go. So, just to give you a snapshot of right now what we've been financing under the different asset class, most of them are in forestry and land use. And at the bottom you will see the available financing instruments that we've been using. In forestry and afforestation, reforestation, all the carbon sequestration projects, most of the financing instruments that have been used are equity funds, loans to private and public sector. When it comes to more agroforestry related projects and pro-biodiversity businesses, such as businesses involved in ecotourism, again, it's been equity or debt funds or some form of structured debt. With forest conservation, where you have tradable permits or biodiversity credits, it's been mostly equity and debt funds and structured debts, including activation of revenues. Other ecosystem services have been more difficult. Most of them have been loans, standard loans to the public sector, and have required quite a bit of blending, meaning that either commission financing has been a part of the financial package, and blending with grant financing. So these are all the financial instruments that are available or that the EIB can actually provide, and they're all graded in certain amounts of risks. So when you have a mature and a mature counterpart, which is the public sector financing, we do direct loans. When we have financing mid-caps, which is usually the development phase, we look for risk-sharing mechanisms, and there the risk is shared by other partners, either another financial institution or, in some cases, the Commission. At the emerging growth phase, we will see us being involved more in securitization of banks or guaranteeing another bank for them to be able to on-lend to to SMEs especially and mid-caps. With very little in the startup business, because this is more venture capital, high risk, and this is actually usually carried out by the European Investment Fund, which is part of the EIB group. But the EIB, the main bank, does not get involved in startups and seed capital. So how does the natural capital financing facility work? And this is one of an example of a blending facility with the Commission. The natural capital financing facility is, with a total amount of 100 to 125 million euros, has been funded by EIB's own resources. It is complementary to the existing activities of the EIB and targets projects in the areas of natural capital and climate adaptation that generally the EIB traditionally does not invest in, either because they are too small. So we are talking about EIB will invest in or finance projects, from 25 million on, total project costs. Anything under that, it'll have to go through a form of intermediated lending, or because of the perceived high risk is not compatible with the creditworthiness requested by the bank. So it does not pass the credit risk department's stress test, and that is an issue for especially projects in the biodiversity area. So today, many such projects rely actually on grant financing or on some form of concessional finance. The EU contribution, which is in the amount of 50 million euro, available as a first loss piece for the bank for this operation, will allow the EIB to undertake actually these riskier operations. The EIB, in addition to these 50 million euros, and there was a question from the floor earlier on, the Commission has also provided 10 million in technical assistance to actually bring these projects up to a standard that they are bankable. And when we talk about being bankable, we talk about them actually providing acceptable financial and economic rates of return. Without that, if there is no cash flow, and I think Frank addressed it at the beginning of his talk, if there is no cash flow, how are they going to repay actually the loan? Projects, just generally for you to understand, I mean, this is the structure of how it's been set up. Will be in four main areas, so green infrastructure, payment for ecosystems, services, pro-biodiversity adaptation, and offsets. And the instruments that are being used are the instruments financial instruments that I showed you earlier on, so anything from direct investment loans to indirect debt or equity, depending on the project type and actually the conditions. So the NCFF is an opportunity for the bank to explore how natural capital considerations can be integrated into EIB's own financial products and services for the private sector, but also to demonstrate that private sector investments complement traditional sources of conservation capital, where other sources, such as public funding, have been affected by the economic downturn. But we don't only do the natural capital financing facility. There are other areas that we are involved in. And with our peer MDBs, we are trying to provide a level playing field through a harmonization of our standards. At the Paris Declaration in the early 90s, there was a move that all the MDBs start harmonizing their standards, including in biodiversity. And when IFC came out with its new performance standard 6 in 2012, you saw EIB, EBRD, African Development Bank, and the Asian Development Bank actually reviewing their own standards and trying to actually harmonize. There are slight differences because we all have slightly different mandates, but overall we are trying to provide that level playing field for the private sector to be able to operate. Also creating a common understanding on definitions, on requirements, and building capacity. And in these areas, I think the multilateral development banks are trying to provide leadership. We also channel financing to business that are environmentally and socially sustainable. And when financial institutions have the policies and tools to better understand how their clients' management of biodiversity affects their performance, as well as the increasing costs associated with the decline in natural capital, they can better incorporate this information in their own due diligence process. So MDB standards currently provide that tool amongst other tools that have been presented today. In order for EIB also to scale up its work, we need, as an institution, to actively start mainstreaming biodiversity considerations across all our sectors and policies, and to gain enough leverage and build externally on our comparative advantage and experience in order to add value. And here, I mean, for example, in the climate change debate, all the institutions have actually a target, a finance target for climate change projects. We don't have one for biodiversity. And question mark, why? Climate has been pretty well mainstreamed across all sectors. Biodiversity hasn't. And it is a hard sell even within my own hierarchy as to why we need to do more in terms of biodiversity. At project level, we should focus on our clients, providing collaborative models to better integrate biodiversity into policies, standards, and operations. And the focus should be on scale. I mean, there's a plethora of small initiatives and a bit of work here and there, but we need to bring this up to scale. And that's also what the NCFF is trying to demonstrate. It's not seed capital financing. It's actually bringing financing to a certain scale that there will be positive development impact in the area of conservation. And also long-term engagement. Without that long-term engagement, I don't think we will see the impacts that we are hoping for. We need to also develop key partnership with peers and institutions and use our own experience in financing to provide solutions and innovative monetary returns on investments in natural capital. We are working a lot on valuation, and we are trying to integrate, as we've done for climate, where we've integrated in our cost-benefit analysis the economic and social price of carbon. We are looking at, with key strategic partners, of doing the same with biodiversity and ecosystems. It's a real challenge. We've heard the challenges around valuation, and we're facing that also at project level. So we will continue to work on drivers and causes of biodiversity loss and help clients address policy failures that currently allow depletion of biodiversity. And priority will be given in changing system-level procedures and processes, designing and adapting financing instruments and economic incentives, including, and this is something and a plea, and we've been trying to work with, also with the Commission, on removing harmful subsidies for sustainable investments. And biodiversity needs to be, again, mainstreamed. At the moment, I think I'm less positive than Anders. Biodiversity is still very boutique-y, and it is very much a niche market in the financial sector. It hasn't been mainstreamed, and I think we have got a long way to go before we reach the level of mainstreaming that we will be able to have a positive impact and reverse the degradation and actually achieve our targets of no biodiversity loss. Thank you.
Thank you, Eva. It's useful to hear the perspective of a large financial institution, and it does matter where the finance sector invests, simply because this is where the money is, and this is what mobilizes action. It's indeed positive to see that the 25% you said of projects are in climate finance, and this is increasing in developing countries to 35%. So there is a positive trend, but indeed, for biodiversity and for other sectors, we're still a long way to go. But with facilities like the Natural Capital Financing Facility, it's good that there are initiatives to mobilize this critical mass, because we are convinced that there are projects out there. They just need to be brought together, pooled, so that the critical mass can start. And now to take clarification questions, then we'll move to the discussion. Please, the gentleman over there.